As we got a consumer inflation just came out this morning, you realize it came in 0 and some even came in negative. How's that going to affect mortgage rates? That's what we're going to talk about in today's video, folks. Mortgage, love to help you out. But let's watch this first because my goal is to help explain to you guys, if you're a homeowner, home buyer, even if you're a realtor loan officer, what in the heck is going to go on with these today? And the most important thing is the whys behind it. So the news that we got out today, this is what happens to the bond market. So as a mortgage analyst, I like to start my day with the chart. And this is the chart that we look at. If you're new to my channel, all you have to understand is that number right up through there. If it's green, that's good news. It means mortgage rates are going to get better. 46 is fantastic. That means mortgage rates will probably drop about 1/8% today. But at the end of this video, after I advise you guys what I'm advising my clients to do, we'll come back to this and I'll tell you what I think is going to happen today and the whys behind it. So the first thing, let's get over to see where the market's going today. We even have the Dow Jones up. The Dow Jones was down about 300-400 points because IBM came out with some earnings today and it was dismal. And their stock, I think it was down like 20%. It was the biggest drop they've ever had in a single day for IBM. But if you look at the markets right now, we got the Dow Jones up, S&P up, and I think we got the NASDAQ at yet another record high. But then you're going to look at the oil prices. And oil prices, you're going to say, okay, Dan, they're above, well, they're about $80 a barrel. Well, this is shocking me as well, because if I look at oil, I'm going to say, okay, mortgage rates are going to go skyrocketing from here. But the news we got today is pretty encouraging. Let's get over to the economic news. Now, what we got today is consumer inflation. Tomorrow, we're going to get producer inflation. And let me show you what the numbers say. Okay, so here we're going to get some numbers right through here. You're going to see core, and then you're going to see a number that doesn't say core. Basically, what this is, CPI. Think of the C in the front of that as consumer. So today we got CPI. Tomorrow, we're going to get the thing called PPI. Think of that as producer inflation. Okay, so let's get over to here. Consumer inflation year over year was 4.2. This is the thing they want at 2. Well, it's a far cry from there. They thought it would drop a little bit at 3.8. It went all the way down to 3.5. Far cry from 2, but it's going in the right direction. Well, now let's look at month over month. Now, this is where it's shocking. Last reading was up, it was almost up 0.5%. They thought it would go a little negative. It went way negative. It's now minus 0.4. So about a 1% move in that. So that's the consumer inflation month over month. So year over year, if this keeps going that way, we're going to have a good consumer inflation number. But now here's the interesting thing is, if we take out the energy prices in our inflation numbers, here's what you're going to see. Month over month in June, we had core, which strips out that energy piece. It was 0. They thought it would stay at 0.2. It was at 0.2 previously. They thought it would stay at 2.2. It went to 0. So again, if you take out oil, we have no inflation. So as this starts to roll through the inflation numbers, we're going to get some cool inflation numbers as long as Iran can stay with the plan. But then we got Wednesday, we got PPI. This is the producer inflation. This is the first piece of the puzzle where inflation is really going to start to spike if it spikes once again. Well, the last reading was 1.1. They thought this would go to 0. But what you have to understand here, this is the June reading. Why this is important? Because we had just think of March-ish, we had oil about $60 a barrel. Then in May, it hit $120 a barrel. That was the highest readings that we've had. Then in June, it started dropping back down to almost the levels that we've had previous to the war. So now this PPI number, what's it going to show? Well, if we're going to show numbers on the producer side, this is where the inflation is really going to start at. So we'll pay attention to tomorrow's numbers. And if these come in as cool as today's numbers, you're going to see the markets rally as well. So now that the inflation on these readings are cool, and we have the Federal Reserve meeting in about 2 weeks, what are they going to do? Well, they're expected to raise rates 2-3 times over the next 2 years. What am I advising my clients? Well, let's get over to it. So if you're a new client of ours, or hopefully we got you pre-approved, and you get a house under contract, so now you need to do the loan, what are we looking to do with your rate? I'm looking to lock it. Okay, we're going to monitor today because I'll get back to where the chart is. It's a pretty good rally today. But we're going to monitor this and see when the market starts to turn a little bit, we're going to lock you in. Because a minus or plus 46, probably going to get you a little bit better of a rate. So that's what I'm looking to do right now. But just think of it on the opposite side. Tomorrow we could get the PPI that's inflated numbers, and we could have a pullback in the markets. We could have mortgage rates jump as well. So I'm going to look at the lock you in if Times tells us for that today. But there's 2 things I want you to monitor if you're looking to buy a house down the road, or maybe you're in the process of building. Those two things are oil, because oil is going to basically dictate where everything's going, and my channel. Just subscribe over there. Every day I'm going to come in for about 5-6 minutes and give you the highlights of the day, and I'm going to show you the bond market that really affects mortgage rates and dictates where they're going to go. So monitor me. I think rates, they're going to start to stagnate here and start to come down, but it's all going to be predicated on oil and the Iranian situation. So what do you do if you're a homeowner right now? I got a couple tools for you. So if you're trying to track rates, you're like, Dan, right before the war, I was going to do it. I missed it. It was 5 something my rate was. Now it's almost 7%. Can you help me with this? Well, we can do that. We can track your rate and your payments if you're a homeowner. Plug your information right up into there. It's Rate Watch 2.2, and plug in all your mortgage information. Let me know what rate you'd be interested in refinancing or how much of a monthly savings you'd like to have. So that's what we're going to have. But now we have also a system here that will review your loan estimates. So what you're probably doing if you're trying to figure out, can I get pre-approved or who's got the best rate? You're probably putting in your application over here, that bank, that lender, lendingtree.com. They sold my credit to 50 different people. My credit's ruined and they got back with me with quotes. I don't know what's going on anyways. Well, upload the best mortgage quote you got into there, right up through there, loan estimate. I'm going to review it. I'll give the video out to you within an hour or two. I'm going to go over you what our fees would be and our rate would be. If we can beat that other lender, the competition on both those, hoping to win you as a client. If you're just trying to track rates, you can do that right through here. Just hit mortgage rates. It'll bring up the screen right through here that we created. It's going to give you all the rates that are published, from the 30-year fixed to the jumbo to FHA adjustable rates. It's also going to give you the prime drivers of the day right through here. It's going to give you the MBS market and the 10-year treasury. I'm going to have to reconnect this. It looked like it's down this morning. But it's also going to give you the headline news of the day. Like today, we got the CPI readings, how that's going to affect the markets and mortgage rates. That'll tell you right down through here. It'll give you the trend and what's happening for the day. Also going to give you my most recent podcast. It's going to give you the indices that we look at each day. Then at the bottom, it's going to give you the prediction markets on what Kalshi and Poly markets are expecting what the Federal Reserve is going to do at the next meeting. They're saying there's a 98% chance, a 90% chance. I'm saying there's a 100% chance. Fed's not going to do anything at this meeting. They're not going to do anything at the upcoming meetings as well. They're going to sit on their hands until this Iranian conflict ends. And once it ends, they're going to basically sit there for about 30 to 60 days to make sure Iran actually abides by all the rules. And if they do, then you're going to start seeing the markets move from there. So be ready for that. If you're a homeowner, if you're a home buyer, reach out to us. We'd love to get you pre-qualified, pre-approved. My slogan is one application, one credit pool. We're going to compare your loan with 30, almost 40 different lenders. Why? Well, here's why we do it. You're watching this video to learn more about mortgages and how do you get the best rate. So like I said, you probably put in your application everywhere and you got a little bit confused with this. Reach out to me. I'd love to help navigate you through home ownership or maybe making housing a little more affordable with a refinance. So thanks for watching. That is it for today. MBSs are up 46. That means mortgage rates are probably going to drop about 1/8% today. So if you locked in the other day with somebody, send that loan estimate over to us. Otherwise, make sure you subscribe down below. Tune in every day so you can understand more if you're a homeowner, home buyer, even if you're a realtor loan officer, what's actually moving rates. And the most important thing is, what's the data that's actually we should focus in on. So that's it for today, folks. God bless. Have a fantastic day. I'll see you back here at the opening bell tomorrow morning to see how that PPI number comes in and where mortgage rates go from here. Thanks for watching. God bless. See you then. Bye-bye.